Alright, hi there. This is the second part of the video whereby I'll be showing you how to prepare the balance sheet of a trading business. Okay, so here in the balance sheet we'll be using the other accounts that we've not used, which is the assets, liabilities, as well as equity. And balance sheet basically stems from the accounting equation, which is assets equals to liabilities plus equity. But this is in the horizontal format. In the balance sheet format, we'll do it in a vertical manner. So I'm just going to rotate it. But we're going to write it in this manner whereby we're going to write the assets component first, and then we're going to write the equity and liabilities. So we're going to follow it in this format. So just imagine the accounting equation being rotated downwards in this manner. Okay, so just make sure that those accounts that we've used, you just tick them so that you know that you don't miss out anything. So I'm going to use tick income, expenses. Alright, so we just left the equity, assets, as well as liabilities. And one thing to note is that the relationship between the income statement and balance sheet is that we will be using the final amount here, the loss for the year, in the balance sheet. So whether it's profit for the year or loss for the year, we will be using the amount here in the balance sheet. Just take note of that. So that's a link between these two financial statements. So without further ado, let's get started. As per normal, we will need to write the name of the business first. That would be Trish Snack Hut. Okay, and then we will have to write the header. Now take note that balance sheet, the header is slightly different from the income statement, so we will write it as balance sheet as at 31st December. Again, spell out the month 2016. Okay, so take note, this is as at for balance sheet, whereas for income statement it is income statement for the year ended. Alright, so here usual practice is that we teach all students right from the beginning to write this 3 columns: cost, accumulated depreciation, as well as net book value. I think it's easier to teach every student these 3 columns because this will stick to with them right from the beginning till they take the national examinations. So don't worry if you have not come across all these terms. It's very simple to fill it in actually. So let's get started. We start with assets first. So every time you write the header, underline. We will always begin the non-current items first. So non-current assets and then followed by current assets. So let's have the focus back here. Okay, I hope it's focused. Okay, so it's non-current assets. So in the question we actually have got 2 non-current assets, so let's underline this first. First being the equipment. Second is fixtures and fittings. So the original cost of these 2 non-current assets is 15,400 and 10,600 respectively. And since we've not learned about accumulated depreciation, we will just write the amount as 0. So how do we find the net book value? Just like how you did the net sales revenue, you will actually minus away the accumulated depreciation. So to get the net sales revenue, you take sales revenue less sales returns. So likewise here, to get the net book value, you take cost minus accumulated depreciation, which happens to be the same amount here. Right, so how do we fill in? Now we're gonna end off this non-current asset segment. So we're just gonna draw a line, right? 26,000. So we end off with double lines. Whenever you end off with double lines. Here 0, so nothing left, and here we're gonna end off with 26,000. Okay, just gonna write one line. I'm not gonna close off yet because the total non-current assets amount, we're gonna add it up with the current assets. So I leave it as open for now. But not forgetting that for format wise, you need to end off with total non-current assets. There's always a closure for every segment. So non-current assets done, and then we're going to move on to current assets. Alright, current assets, underline it. Take note, make sure you have all the current assets. I think we have about cash in hand, cash at bank, trade receivables, as well as inventory. So 4 items actually, so do not miss out on anything. Okay, the interesting thing about the 3 columns here is that these 3 columns only apply to the non-current asset segment. Okay, let me just explain to you in a bit what I mean. Cash at the bank. We have trade receivables, as well as inventory. So all the items, all the segments afterwards, after non-current assets, we actually just need to use the $2 signs. You know, like how you did the income statement, we only focus on the first column and second column. So the first column is if this is the first column, then this would be the second column. So the middle and as well as the last one. So I'm going to write the amount here. For cash in hand is $200, cash at bank 3,000, trade receivables 5,500, as well as inventory 2,500. So we write the amounts in the first column, so called, okay, which happens to be the middle column, and that gives us 11,200. So we're gonna draw a line, okay, which subtotals to 11,200. So what you see here is you need to again end off segment calling it total current assets. So here we go. This total non-current asset plus with total current assets, add it up and you will get 37,200. Right? Done. Close it off with double line. Let's call this line as total assets. So the A segment is done. Okay, now the next part is to carry on with the L as well as the equity. So we always start with equity first, but anyways, the header will be equity and liabilities. I think we want to use it like in alphabetical order. So we're gonna have equity and liabilities first. So the first one, we have owner's equity. Now this is a sole proprietor. Okay, this business is sole proprietor, so we call it owner's equity. Because as a sole proprietor, there's only one owner. So the equity belongs to the owner only. So here we're gonna have now this item called the capital. Now when you do a balance sheet, we will translate this capital and call it something else. We're gonna call it beginning equity. So it's the starting amount that the owner contributes into the business actually. So again, the amount we're going to write in the middle column, like so-called the first column, we will have as much as $34,070. And then we will have to, usually if it was a profit for the year, then we will add profit for the year, but in this case it was a loss for the year. So we will less loss for the year, which happens to be 9470. Then we have to less, because apparently the owner drew out something from the business. The contra equity here, drawings, so less $700. Okay, for drawings it's always a less, it's always a minus. And yep, nothing else. Okay, so this is where the loss for the year comes from. It comes from the income statement. So that's where the linkage is. So yeah, beginning equity, we're going to end off with ending equity. So again, we subtotal it and we get the final amount, 23900. Okay, I'm not going to draw a line below because I'm still continuing and I will add it up with the rest of the liabilities. Next portion, we're going to have the liabilities. We will start off with non-current items also. So non-current liability. Okay, there's only one, which is called long-term loan, but we will always have to change this long-term loan in a balance sheet. We call it something else. We call it long-term borrowings. So always remember to change name. Okay, we have got a long-term borrowings of 8,000. That's the only item. I know it's different, like in the income statement we'll write it in the right column, but here, because we will be having the closure, so the closure we write it at the rightmost column, and we call it total non-current liabilities. Okay, we still have got a few more to go. That is the current liability, and which is we have trade payables, CL, that's the only one. Okay, so I think we can still squeeze into the line here. So we have current liability. Okay, maybe not. Anyways, if you think that there is not enough space, then try not to squeeze them in. We're just going to continue it below. Use another page. Just going to write current liability. We have got one, which is the trade payable, which is as much as 5,300. Nothing else, so we're gonna end off with total current liability. And the final showdown, alright, is to add up all these three amounts. The equity, add up with the non-current liabilities, and add up with the current liability. So add these three amounts, and if it's the same as the total assets, then you're done. Total, equity, and liabilities. So let's see whether I get it. 5,300. Yeah, that's fine. 37,200 as well. So yeah. Okay. Try not to squeeze, okay? If you can't, I mean, there's plenty of paper. I know it's a bit of wastage here, but yeah. So this is how it looks like for your balance sheet. I'm gonna zoom out and show you how it looks like from the start till the end. This is the tree snack hut. Gonna continue in. Right, so there you go. Once you have the total assets equals to your total equity and liabilities, then you know for sure that you're correct. Alright, happy trying.